Hello everybody and welcome back to another video. So in this video I'm going to be going over Tesla's earnings results and why I think they're actually really great long term, but short term they're and I'm going to explain to you why in this video. So let's get right into it. So first of all, the revenue had a very handy beat of 10.74 billion versus 10.4 billion expected, which is great and all, but the earnings themselves, like the profit, was crap. It was 80 cents versus $1.03. And you're probably wondering, well, why the hell did this happen? Why is there a significant beat on the revenue side, but a significant miss on the profit side? And I'm going to go over that in a second. So really one word explains all of this, and that would be energy. And ironically, what I said in my last video, even though my profit numbers were like a mile off and my revenue numbers were relatively close, but still a bit too bullish. But basically, I was right on my general thoughts of the fact that I thought the energy business would have enormous growth in this quarter. And I was completely right there. Energy had an insanely good quarter in terms of growth. But because energy had a good quarter, this actually hurt the rest of their business. Because, in my opinion, the reason for why Tesla was doing price increases for their energy products was not just because demand was enormous, but it was because they were forced to cover the costs of ramping production for their energy products. Because, I mean, you look at, for example, the energy storage business, which is their business that centers around the Powerwall, which is what the price which is the product which the price got increased several times this quarter, right? That had 100% quarter-over-quarter growth. 100%. That is insane. And the solar business also had immense growth, right? But the problem is that the ramping costs, I believe, the cost to ramp production of these two segments of their business was so enormous that the price increases in their products absolutely was not able to hedge this off. So I believe that the ramping cost is what killed their profits. But the energy business, because it had such amazing growth, is why the revenue numbers are so good. So basically, the energy business both hurt them and was good for them this quarter. Now, why do I think this is bad short term and good long term? Good question. The reason I think that is because long term, this means that the energy business is growing very fast. And that also means that I believe next quarter, the profit numbers will be much stronger than this one. Because by next quarter, I believe that the production ramp on the solar and energy storage business side will not be quite as heavy. The cost won't be as bad, and the business will be more profitable in general, starting next quarter, I believe, which is the first piece of sort of good news long term. But the next one, of course, is that this quarter showed us that we have an enormous increase in demand for their energy products, and just generally the business, the energy business has grown incredibly quickly this quarter. So long term, this is great news because the energy business is becoming a larger and larger section of Tesla's business, which is great because that means long term, more and more profits for the company and more revenue for the company, right? So great news long term, but short term, it's shit because the energy business completely killed off their profits this quarter because of the incredibly high ramping costs that I believe Tesla has had this quarter to be able to ramp production for their energy business. And even though I think this is shit short term, I'm not saying it's not possible for the stock to be up tomorrow. It is possible if Elon gives some very strong guidance and, I don't know, announces some product. Maybe the Plaid Model S or something like that. It is still possible that tomorrow we could have a green day. But personally, I do not find it awfully likely just because the mainstream media is going to paint a much darker picture of this earnings report than it really is. They're not going to talk about the energy business having amazing growth. They're going to be talking about the profit. That's all they're going to be stressing in their articles. So for that reason, it's just going to be so much in people's face that tomorrow, I think it's more likely that we see a sell-off. I don't know when the bottom is going to be. I think it could be 820 potentially. Very, very much could be. It could be as low as 800 potentially. It very well could be. And I think worst case scenario would go down to 750. Although I don't find that awfully likely. It's, a possibility. I'm not saying that it's literally impossible to happen. But in general, I'm expecting a down day tomorrow, but I still think the stock is going to have a freaking blowout year this year and is again going to make short sellers cry. So if you guys did enjoy this video and agree or disagree with my views, feel free to comment down below on that. And also, it'd be awesome if you guys left a like and subscribe. That'd be really, really awesome. And I'm going to catch you guys next time. Peace.